what informs the decision to focus on margin loans of the entire banking sector and the non-performing loans of the rescued banks in this $2.2 billion of loans that AMCON is looking to buy?
Let me correct it, 2.2 trillion.
2.2 trillion.
Yeah,
of course.
You have to understand that the primary objective of AMCON is to help resolve the banking crisis. And so we wanted to deal first with the institutions that require the most resolution, which are the rescued banks. So we addressed their NPLs, non-performing loans, first. The reason why we addressed all margin loans across the industry is because they are more susceptible to analysis. And because markets trade very openly, we thought we should deal with all the margin loans at once. So we don't have distortions, deal with some of them and not the rest of them.
Now, of course, you are in negotiations with the rescued banks at this stage. Can you just give us a sense of where you are now? Because obviously, you will be doing transactions with the rescued banks, and this is ahead of possible M&A activity, which we anticipate in the banking sector. Fine, now you've given us some guidelines in terms of valuations, but I imagine that you have been in talks up till now.
AMCON has not been formally constituted until yesterday. So we couldn't really have talks with banks about other activities. What we have tried to do is work with the central bank and with the project implementation team that has been on ground for a while to get a sense of what the banks would need for the rescue and for recapitalization. The process of rescue involves, first of all, buying the non-performing loans. Second step is to recapitalize those banks to a point where they have zero equity. So we wipe out the negative equity. And the third step is then to find strong partners who will then acquire these institutions and bring them to capital adequacy and run them so they can help the Nigerian economy. This is the first step, where we buy the non-performing loans. The next step will be to recapitalize the banks. And the third step will be, even though those two steps may happen at the same time, is to find suitable M&A partners for them.
We'll be talking about valuation in a minute, but give us a sense of what is going to happen to this $4 billion that the central bank has injected. 620 billion naira was injected in August last year into the banks. Most analysts expect some substitution at some point. At what point do you, with AMCON now coming into play and of course providing this liquidity through this bond issuance to these banks, at what point will we see these banks paying back these loans?
Most of the rescued banks, after the purchase of non-performing loans, will require further capital to get to zero capital status. So we will discuss, and part of their negative capital is the debt or the loans that CBN has advanced to them. So when we're talking about recapitalization, that will be taken into account. It is expected that AMCON will, in some form, assume those loans, either as equity or as preferred shares in some form, and take it over from the central bank.
Okay, now let's talk about valuation, because this is a thorny issue. Some are even saying that this is more of a bank subsidy where we're having distressed assets being bought at a premium. You have announced that there will be a 60% premium on the current 60-day average share price of margin loans in where you want to intervene in this and buy back these loans. But some are arguing that why should you be putting a premium on a distressed asset? But can you just give us a sense of the valuation methodology and what it really informs it?
Well, people must understand that even in developed countries like America with very sophisticated capital markets, when there's a firm or a company being acquired by another firm, there's a usual premium paid by the acquirer for the acquired shares. AMCON is in a position where it's acquiring large amounts of shares from these institutions. There should be a premium for being able to buy large blocks of assets. It happens everywhere. The issue is, what's the proper premium? And we approach that by looking at the long-term value of banking institutions at 2 times book. And we use that long-term value to approximate the premium required for Nigerian banks. And the 2 times book equates to roughly a 60% premium of where shares are trading today.
But some others will argue that, yes, you would be buying a lot of bank shares, but you also be buying other shares, I imagine, insurance companies, other companies in the FMCG sector, and you're applying the same premium across board for all these companies.
Well, the market is the best guide for prices. And for things that trade in open exchanges, the assumption here is that the market has determined where these insurance companies should be trading, where the bank should be trading, and so we apply a uniform premium on all shares that are listed. We understand that this may not be a perfect answer for every share, but we think that this is something that is transparent, uniform, and people can understand. So there doesn't seem to be any arbitrary judgments by AMCON.
Let's come back to the issue of how much you are buying back. The total loans to be purchased by AMCON in the press release is estimated at 2.2 trillion naira. Can you just give us a sense, or should I say break down that number for us? Because we do know that part of that is non-performing loans of rescued banks. Part of that is also margin loans for the broader banking sector. Can you just break that down for us? And of course, there's also the part that is unsecured loans in the banking sector, in the rescued banks as well.
The 2.2 trillion number refers to the face value of the loans being acquired. That doesn't tell you the price AMCON is paying for those loans. It will obviously be less than the face amount, but that depends on the total. The breakdown roughly is about 50% margin loans and about 50% non-margin loans. And of the non-margin loans, we figure about 10 to 20% may be unsecured.
Indeed. Okay, but let's talk a bit about the margin loans and the impact that AMCON's activity is going to have on the market. Up till now, we've seen a situation where banks continue to come intermittently supplying shares to the market and depressing the equity market. It's had a bearing on the market all of this year, really, bringing down the market gains from 35% in April to where they are today. Is it safe to say that with AMCON coming on stream now, and of course taking those margin loans off the books of many of these banks, and including the rescued banks, that we will not see that selling pressure anymore?
Well, AMCON is a publicly owned institution, and we're going to be acquiring large amounts of shares. AMCON luckily has long-term funding at reasonable rates compared to the institutions that had these loans. AMCON will not be selling any shares in the immediate future. And when AMCON decides to sell, it will be announced and publicized so that nothing untoward happens. But I don't think that AMCON will be selling any of the shares or assets it acquires in the immediate future.
Would that also apply to real estate assets that you might be acquiring as well?
The current thinking is that AMCON will be holding assets it acquires for at least 2 years.
Okay, now let's talk about, I think this will be the final point that I will bring up today. AMCON is expected to take up equity in these shares, in these rescued banks as well. Considering that these banks will receive fresh equity investments from new strategic investors, how much equity can we anticipate that AMCON will be taking in some of these rescued banks?
That will be subject of 2 negotiations. Negotiation 1 will be between AMCON and the existing shareholders of the institution. When that is resolved, AMCON and the existing shareholders will then negotiate with the new investors. And so it'll have to be case-by-case basis. It will depend on how much equity AMCON puts in. It will depend on how dire the situation of the bank is, and it will determine on the strength that the new investors see in the existing bank. So it will be case-by-case basis.
Will it be safe to say that no bank will be allowed to fail? Because there was that fear before AMCON, of course, came on board.
The AMCON is a resolution vehicle, and it will be AMCON's fondest hopes that no bank fails. But it's not totally within AMCON's power. You can have shareholders who refuse to be acquired by somebody else. AMCON doesn't control that. Shareholders have to approve any M&A activity. But AMCON will do its best to make sure that it acts as a resolving institution, and we hope no bank fails.